Hi, I'm Danielle Mitchell. I'm a licensed commercial insurance agent and risk consultant with Cadence Insurance. I specialize in commercial insurance for mid to large sized local businesses. I help business owners and leaders to develop a comprehensive strategy to mitigate risk, improve insurance premiums, and prosper. Today we will be discussing what is a member-owned group captive. I get really excited about this topic because this insurance structure is a game changer. Once you understand the difference between traditional insurance and a captive, you are going to want to be in a captive, which is why many captive programs have as high as a 98% retention rate. But not every business can qualify. This is only for established businesses that are financially stable and have a strong safety culture. So a captive is going to level up your business. Once you go captive, you won't want to go back. So what is a captive? First, let me clarify that there are different types of captives available depending on the needs of your business. For today's video, I'm specifically discussing a member-owned group captive, but we'll just be referring to it as a captive. All captives are an alternative insurance solution from traditional insurance. So with traditional insurance, the carrier determines your rate by pooling the loss numbers of your business with other similar classes of businesses, and based on the loss ratio of all of those businesses, good, bad, or ugly, your premiums are calculated to cover the cost of everybody. And if you have little to no claims, guess who keeps the profit? That's right, the insurance carrier. Now with a captive, on the other hand, you must qualify to get in, so now you are only pooled and rated along with the best performing companies. Your rates are no longer affected by the poorly performing businesses that have no choice but to be in the traditional insurance market. So with a captive, you would actually purchase a share of the insurance company, making you an owner member of the insurance company or captive, earning you decision-making privileges as well as profits. So with a captive, the premiums that you pay throughout the year are invested, and the interest plus the profits are paid back to you. So properly managed captives provide substantial returns on investments. The returns will of course vary amongst members and captives, but an average return could be around 23% of the dollars invested in your loss funds. So for example, if you're paying $300,000 annually between workers' comp, general liability, and auto altogether, you could receive an average return of around $38,000. And the better your safety and claims, the higher that return could be. So this captive underwriting profit margin outpaces virtually any other investment in the marketplace. In order to estimate how much of a return your specific business would expect, all you would need to provide are your policies and loss runs, and then I could run the numbers and reports to determine if a captive would be a fit for you. If the captive is not yet a fit for you, we can work together to create a strategy and a plan to get you set up and ready for the captive in the future. So who is an ideal fit for a captive? Because not all businesses qualify for entry into a captive. I'm going to give you three main qualifiers. Number one, it must be an established, financially strong business. Number two, depending on your class of business, there are minimum premiums to get in. So we would look at the total premiums that you're paying between workers' comp, general liability, and auto altogether, and your annual premium for these combined would have to be at least $100,000, with some classes requiring $150,000 to $200,000 minimum to get in. And then third, we're looking for businesses with strong safety culture. Your claims history will be a primary factor in determining your eligibility. Maybe you've had some claims, and that's okay. By reviewing your premiums and loss runs, we'll be able to determine if your losses would be acceptable. So what are the main advantages of a captive? I'm going to give you 5. So number one would be reduced insurance cost. You aren't pooled with the poor performing businesses and stuck paying rates based on everybody else's performance. With a captive, you are pooled and rated only with the best businesses, which means your insurance premiums will be reduced. Number two, you're going to have enhanced profit potential. So your premiums are invested and the underwriting profits plus interest are returned to you. These returns outpace virtually any other investment in the marketplace. Number 3, you're gonna have insulation from market fluctuations. So captives are not subject to hard and soft market swings. This means that when the insurance market hardens and everybody's renewals are going up, the captive's premiums are unaffected and you're gonna benefit from more levelized renewal premiums. Number 4 is you're gonna have tax advantages. So the premiums are deductible, as with traditional insurance, but with the captives, the revenues are also deductible. And another benefit is that the returns can be paid out to the business or the business owner personally. Number 5 is you're gonna have increased control over your claims management. Since you are a member owner of the captive, you have control over how your claims are responded to, unlike with traditional insurance where the carrier completely makes all of those decisions regardless of your opinion. So, okay, those are some of the main benefits of the captive. If you have not explored a captive and your business qualifies to get into one, then you are really missing out. If you've been with traditional commercial insurance carriers since your business inception, I know that captives can seem like somewhat of a foreign concept. Captives are an advanced level insuring structure, and I've only touched on the basics here today. To get a full understanding of how a captive can benefit your business, I'd love to sit down and discuss the details in person with you to analyze if the captive would be a good fit for your particular business. So as far as timing, typically the most ideal time for us to sit down to discuss a captive would be around 6 months prior to your renewal date. But we can start this discussion at any time during the year, regardless of when your renewal date is. And really, the sooner that we get started, the better. If you want to explore a captive further, let's talk. My goal, as always, is to help you to level up your business. Wishing you a great day and a prosperous year. Thank you.